I'm going to first show you how this Google Sheets document works and then explain to you step by step how to create it. The first sheet, let's call it sheet accounts. This sheet is going to have all of your bank accounts, all of your investment accounts, as well as your cash. And down here, we have your debts. Now, the way it's going to work is the day you prepare this sheet, input that date here so that you can keep track of your progress. And the date here will be your current date always. Input all of your opening balances on the date of your creating this sheet. For example, bank 1 would be the bank where you draw your salary, and that, let's name it HSBC or any other bank that you deal with. Move over to the opening balance column and input the current balance that is in your account. Your transactions column would be automated with the help of this SUMIF formula. It's the same formula that goes all the way down till the end. Your closing balance is nothing but your opening balance plus your transaction column. So this would be and should be the amount left over in your banks, investments, cash, and your debts. And that balance will be on your current date. I hope you're with me so far. We'll now create a second tab in your Google Sheets called Budget. By the name of the tab, you might have probably guessed that this tab in fact does contain your monthly budget. I've already gone ahead and input some sample figures as your monthly budget. Let's say your household has 3 incomes, one of 10,000, 5,000 and 2,000. Therefore, your total monthly income is now 17,000. And what you want to do is make a budget so that the total of the expenses, EMIs and savings add up to your monthly income. Let's say you have groceries of 2,000 per month, internet of 500 per month, electricity of 800 per month, fuel of 850 per month, clothes 250, your haircuts and whatnot 250, repairs and maintenance 500, gym 420 and miscellaneous 430 for a nice round figure of 6,000. That would mean that we have 11,000 left over from our monthly income. We also have a monthly repayment of a car loan, which amounts to 900 per month, a home mortgage that amounts to 3,100 per month. And so now if you add up the budgeted expenses and the EMIs, that would sum up to 10,000 per month, which would leave us with 7,000 remaining. And the rest we're going to allocate and set aside towards repaying your debts. Now this total would be 7,000 and the grand total should add up to that beautiful 17,000 of monthly income that you have. Now as you can see, I have set up a variance column and an actual column by every single month, which is also all automatic with the help of some SUMIF formulas. Now last but not least, I have another sheet called Tracker, and this is how it's going to look. This sheet is going to contain every single transaction that you do starting from the date you prepare this sheet. So let's say you start this sheet on the 1st of January 2025. Now all of your incomes are going to come into column B and all of your expenses are going into column D. Let's say on 1st of January, we get a salary of 10,000 for the month. We now go in here and select which bank that salary has come into. And then we select what category that income falls under. In this case, let's say income 1. Now, if we go back into the budget sheet, we can now see that this 10,000 has automatically already come into this actual column under January and for income 1. It's not gone into income 2, income 3, expenses. It's not gone into February, March. It's gone into this section. And our variance has now become 0 because what we budgeted and what we received has been exactly the same. Let's take a step backwards again and go into the account sheet, and you can now see here that HSBC Bank, which had a balance of 30, now has an income of 10,000 and the closing balance is now 10,030. Likewise, let's quickly input an expense item for the month of February just to see how that looks. Let's say 15th Feb 25. Let's say we purchase some groceries, but feel free to put in more information so that it makes more sense to you when you look back at it at a future date. Maybe you bought groceries on Amazon and it cost you 100. Again, come into the account. Maybe you use the same HSBC account to pay for it, and our category is going to be grocery. If we go back into the budget section, you can see that nothing has changed in January because the date was February. In February, against grocery, you have 100 now, and you still have 1,900 pending against your budget. Once again, if we go back into the accounts tab, you will now see that your transactions has dropped by 100 and your closing balance is now 9,930. So let's see how to create this Google Sheet. Okay, let's start with accounts tab. The first thing that you're going to want to do, as I said, delete this cell and put in the date on which you're creating this sheet. If you're creating it on the 1st of March, put 1st of March there. Cell E1 is going to have this formula equal to today and open and close round brackets. This will automatically input that day's date. I am recording this video on the 14th of February 2025, and that is why it is showing 14th of February 2025. Once you're done with that, go ahead and input all of these labels, input all of your bank's investments and cash details, and that's that. We leave the opening balance column blank for a later time. Down here in cell C9, you can add up the entire column using the sum formula and drag that across to the other two columns as well. Similarly, go into your debt section and input all of your debts. And remember, you don't have to have only 5 accounts up here, and you don't only have to have 2 accounts down here. Input all of your accounts and all of your debts in this sheet. Again, we leave the opening balances blank. We'll add up the debts down here, and all the way here at the bottom, what we're going to do is add up the incomes and the debts. Remember, we are adding it because the figures coming here would be negative. So this grand total here would give you a rough indication of your net worth. Of course, that would be without your physical assets like your car and your house. Now, as I said, the closing balances are going to be very simple. It's just going to be your opening balance plus your transaction column. Let's move into the budget tab before we get into these SUMIF formulas. Now, this budget sheet is a little bit more complex, so pay attention. Okay, so the first thing that you want to do in your budget sheet is create these headings. Start from column C. You need 2 columns for the months, and under each month you want a separate column for the actuals and the variance. Once you've done that, you can go ahead and merge the 2 cells that have your monthly headers so that it's a little more pleasing to the eye. Above that, in row 1, what I want you to do is input your months in numerical value. So January would be 1, Feb would be 2, March would be 3, and so on. So below your headers, come down and input all of your incomes and expenses descriptions in column A. Against those descriptions, I want you to come into column B and enter in your budgeted figures. Again, we leave the actual column formula for a little bit later in the video, but the variance formula is pretty simple. All it is your actual figure minus your budgeted figure. The bottom row for each section is nothing but the sum of that entire category above. Now, I know that some of these things can be a little complicated to understand. If you do have any questions, let me know in the comment section down below and I will try to answer them for you. Alright, so now let's move on to the tracker section. In the tracker section, you want to have a date column, an income and an income amount column, an expense and an expense amount column, what account you're using for that transaction, and what category does the transaction fall under. These columns are obviously going to remain blank at the moment until you start using the sheet. To create these drop-down menus for the accounts and the categories, it's pretty simple. What you want to do is go into the data section on your ribbon and come down here to data validation. I'll create a new drop-down list in column H just so I can explain how it works. You should have a pop-up window that looks something like this. The first requirement is the apply to range. Here we want to select the range where you want the drop-down list. I've selected tracker H3 to H19, for example. I'm going to click OK, and as you can see, I already have drop-downs all the way down from H3 to H19. Here under criteria, it's going to ask you what type of data validation you're looking for. We're going to select drop down from a range. This is where you're going to select that range from which your data gets pulled so that you can now create the drop down using that data. I hope that makes sense. So in this case, if we are doing the accounts column, we are going to select this, go into the accounts tab and select the items that are part of the accounts list. Click OK and let's move back to tracker. But this doesn't really look that appealing. As you can see now, all of the drop downs have the exact same items that were present in the accounts tab. And that's because it's pretty confusing that our headings and our accounts look the same. What I like to do is come in here and select a different color for our headings so that it's easier to distinguish when we are using this sheet. So I want our accounts to be in green and our debts to be in red. If I now click out and click back in, it's now pretty beautiful and obvious where our headings are and what we need to select. That's it. All you have to do is click on done and we are done for this portion. You can close out of the data validation column. Now there is one other thing in the tracker sheet that's a little bit sneaky. Now you can place this anywhere you want. I like to keep it a little bit out of sight. But what I've done is all the way here in column Y, I've added this little formula which says equal to month, and in brackets, I've selected the corresponding cell where we have our date. So in this case, I have month A10, which will give me the month for the date I input into this cell. If I put 1st of March 25, it's only going to say which month this date belongs to. So if I scroll over to the right, you should be able to see that Y10 has a value of 3. Now this step is very important and it's important to set it up beforehand so that your formulas don't change in the future. Okay, so now we are very close to the end. All we have to do is learn those SUMIF formulas and we are done. And it's not that difficult. In the budget tab, what we're going to say is SUMIFs, which means we have multiple SUMIF criteria in this formula. The sum range is what are we trying to add up. We are trying to add up the items in tab tracker, and the range that we're going to add up is C3 to C9999. Now if we go back into tracker, you can see that C3 is the amount column of the incomes and it starts from C3 and goes all the way down to cell 9999, and you can keep it at whatever cell that you want. The more cells you have set up ready, you don't have to tweak this formula for a long time. So again, if our sum range is what we want to add up, and then our first criteria is G3 in tracker to G9999, that's the range, column G basically, is what? Is A55 right here. This is the first criteria. So essentially what this first section of the formula is doing is adding up this part, tracker income amounts, if tracker G column, which is our incomes or expenses or debts, matches up with A5 or income 1, income 2, income 3, and so on. So the way Google Sheets is going to work is try and solve for criteria 1, which is basically wherever there's a criteria matching to this column right here in column G of the tracker tab, it's going to add up those figures. But wait, it's also going to check for a second criteria, which is our numerical month figure that we did in column Y of the tracker tab, if the items in that column match up with C1, which is the reason right at the beginning I told you to input those numerical values for each month up here. And that's pretty much it. We're done with the budget tab as well. Let's quickly move on to the accounts tab and figure out the SUMIF formula here. Now this SUMIF formula, if you noticed, is a little bit different from the SUMIFs that we used earlier. And here what we're going to simply say is sum if. So we want the sum if a certain criteria is met. The first thing for sum if is the range. The range here is going to be the F column of the tracker. If we go into tracker, F column is the account column. This is going to see whether the items in that drop-down list match this particular accounts. So if the items from column F of tracker matches with the criteria, which is this particular item, then we want sum range to be column C of tracker, which is the income amount column in the tracker tab, minus sum if again, and this time we want to also check the same column, which is the F column in the tracker tab, matches with the same criteria, but this time we're adding up the expense column, which is column E in the tracker tab. So as you can see, B3 is HSBC. We are checking the result in tracker column F, but we are saying if HSBC has incomes, add that minus the expenses that are paid using HSBC. That's it. It's that simple. Copy this across your other cells and we're done. You have this sheet ready to go. Now, if you did find that a little bit tricky and you want this actual sheet to work with, I will leave a link in the description below, which you can click and download. Now you tell me, was that complex or was it just magic?